Hello, and welcome back to Explain the Charts. Today, March 24th, 2025, we're taking a deep dive into the USDCAD pair. We're going to analyze both the recent news and the chart data to figure out potential trading opportunities. First, let's address some current events. According to recent news, Canada's Prime Minister has called for a snap election on April 28th. This has introduced some uncertainty into the Canadian dollar. Additionally, the market is anticipating potential tariffs from the US, which could further impact the CD. These factors, combined with expectations of potential Federal Reserve rate cuts, are creating interesting dynamics for this pair. Now, let's shift our focus to the charts. Looking at the one-day chart, we can see a period of considerable volatility dating back from late 2023 through 2024 and into early 2025. There are several sharp swings, indicating sensitivity to economic and political events. Let's narrow into the start of 2025 to see what we can find. Here, from January 2025 onwards, we observe the price action has been chopping around quite a bit. It's been bouncing between roughly 1.43 and 1.45, with some significant wicks to the downside, such as early January and mid-March. This could signal potential buying pressure around those lower levels. A move below 1.43 could signal further downside risk, whereas continued consolidation or a move towards 1.45 could hint at potential upside. Now, let's switch to the one-hour chart to examine the recent price action in more detail. Looking at the last few weeks, we see more clearly these swings I mentioned. The price has been largely consolidating in a tighter range recently. We will need to look more at the 15-minute chart to narrow down more recent events. Okay, let's switch to the 15-minute chart. On the 15-minute chart, we see the price action is mostly flat. Given the upcoming election and the potential impact of tariffs, it's reasonable to expect increased volatility in the coming weeks. For now, the pair appears to be in a holding pattern, awaiting a catalyst for a significant move. If we see a break above 1.435, it could trigger a bullish move. Conversely, a break below 1.43 would favor the bears. Let's recap. Key price levels to watch are 1.4300 and 1.4500. A break below 1.4300 is a bearish signal, while pushing above 1.4500 would be bullish. Currently, based on the news, I give a 60% chance of a bearish breakdown. However, a shift in sentiment or clarification regarding Trump's tariffs could easily change the trajectory. Keep an eye on economic data releases and any political developments related to the election. That's it for today's analysis on Explain the Charts. Happy trading, and we'll see you next time.